while. So this will be fun.
Amazing. And we're live. Welcome, everyone. And we're live with the closing show live. So if you got the alert to have no idea what this is, it happens. Sometimes it happens to me. The Closing Show Live is a weekly live show where we feature the people of Proposify, sales stars in the trenches, and revenue leaders. Every week, we discuss the challenges we're facing and the no BS lessons we've learned so you can crush your close rates. Today, the Closing Show Live is brought to you by Proposify. So none other than Proposify. So stop proposal chaos for good, get more control and visibility into the close with Proposify. So we're giving away a ton of stuff today. I'm really super excited about this. We're getting more giveaways as the weeks go on. So today you can win a 3-month subscription to Proposify to help you close the year out strong. All you got to do is enter a question in the LinkedIn comments and you'll be entered to win, and you will win today. You'll find out today if you've won that 3-month subscription to Proposify. And not only that, we're also giving away 3 Proposify t-shirts. So a bunch of swag. What do you got to do to win that? Really easy. Just post about one takeaway from this live. There's going to be lots, believe me. And then you post it on LinkedIn and tag Proposify. So one takeaway, and on LinkedIn and tag Proposify. So I'm so excited today because we get to speak to Asad Zaman. So he is the CEO of Sales Talent Agency, and we're going to review the economy. So we know we've seen it all the things that are happening online. There's a bunch of tech layoffs. We've seen it. The economy is slowing down, and sales professionals are seeing it too. Like more objections in the buying cycle. Deals are taking longer. Close rates are not that great the last little bit. So it's slowing down, but what does it actually mean for sales professionals? So Asad is going to take us through sales hiring trends, the economy, his point of view, and how your deals may be getting affected. So welcome, Asad, to the show.
Hi, Nadia. Thank you for having me.
I'm so happy you're here.
I'm excited to be here.
Amazing. Fantastic. So we're gonna get right to it because there's a lot to cover, and every single week I start too late. So what happens is we talk about a bunch of stuff and then it's 5 minutes after the show and then we only have 25 minutes. So there's so much to cover. There's so many questions to ask you. I'm really excited. And the reason why is because you see all of this stuff in advance, right? Because you are CEO of Sales Talent Agency. You're hiring sales professionals. So you see the trends, the hiring trends, when the market's slowing down, probably less hiring happening. When the market's booming, there's a lot of hiring. And you are specifically hiring sales professionals. So you really get to see what's happening. So what have you been seeing so far with sales trends this year, specifically beginning of year, and how has that changed quarter over quarter?
It's been a fascinating year. To be honest, it's been a fascinating couple of years. So I think you have to look at 3 years together to really get a read on what's happening. And so we'll touch on everything on a very high level 3 years ago, but then we'll get into more detail as we come forward. So 3 years ago, pandemic hits and there's this economic shutdown that comes immediately because of that. And with that economic shutdown, we also had to work from home. So it has fundamentally changed how we operate our businesses and how we work and how we live as well because of the lockdown. Because of that, 2 things happened. So from the consumer tech side of things, you and I are sitting at home and digitally doing the things that we would do in the analog world before, buying tissue paper online versus in person, groceries. My parents were on Instacart. And this created habits and for those companies, it showed growth, right? And that growth, they felt, well, wow, look at this. We need to put our foot down and try and capture as much demand as we can. On the B2B side, we had companies that were never set up to operate virtually that had to now operate virtually. And it's much easier for a firm that's smaller or more service oriented to be able to do that than, let's say, a bank where there's security, regulation, all these different considerations. Right. And so they had to buy a lot of technology to just be able to function in that environment. And then they had to solve for, and all of us had to solve for, how do you actually run a great business online? How do you take care of culture? How do you create camaraderie, etc.? And so that created demand for B2B tech. And so these two things, you see demand increasing for both of these types of companies. And that increased demand gave investors a lot of reason to deploy capital into the market, and more capital than they deployed ever before, because they were seeing proof points for that, right? They were seeing more demand than they'd ever seen before. Cost of capital was low because interest rates were low. And so they were deploying lots of capital. And as they were deploying capital, there's only a finite number of great companies out there. Even though there are hundreds of them, or maybe even thousands of them, it's still a finite number. So you have all these investors that are fighting to get into these deals. And inevitably, one of the mechanisms that they use to win a deal, beyond all the other great things they do, is valuations, right? They'll give a company a better valuation than another investor might give. And so, because of that, what you saw was the valuations in tech go from a standard of 10 to 20 times revenue to 50 to 100. And that's what was playing out last year. We were in this really hot market, right? So the market froze because of the pandemic. It warmed up. We all stabilized. We started functioning. And then we saw all these great things happen and the market became hot. From there, on the background, you had inflation becoming an issue. And because inflation was an issue, the central banks have one thing that they can do. They don't have a very nuanced way to manage inflation. It's a blunt instrument. It's the interest rates. Well, if you increase interest rates and valuations for any type of company correlate, right? There's a causation effect there. And so as interest rates come up, now there has to be a correction for valuations, which you started seeing play out actually at the end of last year. So if you looked at the public markets towards October, November, December, the correction had begun. But then you throw in all the other macro issues like inflation being much harder to control than anyone thought, Ukraine and Russia fighting a war and that having impacts on gas prices and food prices, etc. All those things have now caused a very choppy economic environment. And now you have basically a lot of companies that are looking out and saying, we predict a lot of instability into the future. We have raised our last rounds at very high valuations, and we can't raise at the same valuation anymore. That's not going to happen. So we now need to increase our revenue and increase our runway to try and increase that revenue and get to a point where we can go and raise a round of funding. And for that, the market has to stabilize and we need to do a lot of work. And so what does that mean? That means cost cutting. And so what we've seen is bringing it all together. At the start of this year, the market felt hot from a hiring perspective. I did the Sales Hacker podcast in, I think, March or April. And at the time, so at the time, in the top 10 markets of North America, there were 92,000 software salespeople for 137,000 open jobs. Right? So there was much higher demand than there was supply. So while the correction was happening and the market was dealing with some of these problems, the market still felt hot from a hiring perspective. That is now no longer the case. Layoffs have happened across the board. 2023, the first half seems choppy. More layoffs might happen, and the demand has dropped. It hasn't dropped to the levels that I think people think it's dropped, and we can talk about that. Yeah. But that's really what's played out over the last bit.
So can you talk a little bit about that? So the sales hiring trend specifically. So we talked about the Q1 where there was still this hot market, lots more demand, even though we were seeing some of the economic market conditions slowing down. And then now you're seeing that's no longer there. But is it dismal? Like, should sales professionals be worried? And what are your thoughts on that?
It's a good question. So I think contextualizing the state of the environment is important. So there's about 9.5 million people that work in tech in North America. Going off of layoffs.fyi, and there are different places you can look, there are about 100 and something thousand layoffs, at least on that platform. Give it a margin of error, right? Say they are off by a multiple of 3. So let's say they've been somewhere like 300,000-400,000 layoffs. So 9.5 million workers, 300,000-400,000 layoffs. There's still 475,000 open jobs in tech right now, as of yesterday. There are about 380,000 software salespeople in the last 7 days. 28,000 software sales jobs have been posted. So I would say it's very easy to get very concerned because we just went through the pandemic, and at that time it wasn't like this. There weren't opportunities for that first couple of months, right? Other than the 10% of companies that were facilitating us to be able to operate our businesses virtually, like Zoom, everybody else was just in a tricky spot. This is different. There's still some demand. There's still opportunities out there. It's just not what it was before. I don't think this is a normal market by any means, but we're moving towards a more normal market, one that people are used to being in. So, how should salespeople feel about that? A few things. Um, One is that I think you should be concerned for the short term
Hmm.
because you're in a for two reasons. Number one, it's hard to know if you're secure, right, in the company that you're in. So you have a job right now. Well, there are companies that raised funding not too long ago that had to do layoffs, right? So that's going to cause some anxiety, and it's hard to know why one does it and why another doesn't when you're a salesperson, especially when you're a more junior salesperson in these companies. So you should be, you're going to feel a little bit anxious about that, and you have to probably keep an eye open and try to gain as much information about what is the state of our business. There's some signals, right? Like if your company raised around at a really intense valuation last year and was investing heavily in growth. And now the market dynamics have changed. So you're noticing pipelines aren't as strong and demand is a little bit lower. You have cause for concern. I'm not saying that company is going to do layoffs, but you have cause for concern. So that's one element of it. The other is if you're looking for a job, will it be a little bit harder to find a job than it was last year? Of course, right? Like there's less demand, there's more active candidates in the market, so it will be a little bit trickier to find. There are less great jobs out there, and a lot of people fighting for them. So you're going to feel that it's much harder to get that great job that you're looking for, but it's not impossible. And if you're good and if you're doing the right things, you can get a good job even right now. The third thing is that I think the flip side of it, right? Like it's very easy to like talk about the negatives. Like, what's the positive here? Like, what can we do? What does this market give us an opportunity with? I think it's the fact that these are the markets where career planning should happen.
Hmm.
You know what I mean? Like, so think about it like this. In a hot market, last year, every solution in tech looked like a mission critical solution, right? Everything looked great. Like
Right.
it was a frothy market. We were spending frivolously. And so you would see things that I would debate. I was shocked that they saw the type of growth that they saw. But those companies with those growth metrics would have said, look, we are best in class in all of these metrics. We're mission critical. Now we'll actually learn what's mission critical and what's not. A few months ago, Gartner surveyed a bunch of CIOs, and they came back with two really interesting data points. SaaS spending and cloud spending both are going to increase by 20% next year.
Okay, that's
Right?
promising.
Promising. Microsoft just did their survey, which is very similar. They go to the CIOs of their biggest clients. They're like, yo, how are you going to spend money next year? And they also came back and they said, we're going to increase spending in a couple of these areas. And the measurement was less than Gartner's. Theirs was like 4.5 to 5%. In both, there's growth next year overall in the segment, right? But we know that cloud is a big word and SaaS
Right.
specifically is a big word. So within SaaS, there are a bunch of these different categories. Not every category is going to grow because not every category is important. Now is where you get to see what are the things that these CIOs are willing to spend on in a choppy market. Those are the areas that are the most secure places to take your career. If you're thinking out in the long term, you want as a software salesperson to work in a company or in a sector that is secure in the downturn and has growth so that you can benefit from the upswings and the growth and the upward mobility, etc. Right? Now you can identify that stuff and you can tilt your career towards those companies. You'll see that now. You couldn't have seen that next year. So that there is an opportunity here for people. And that would be it, I think.
Can you call out some categories within SaaS that are probably going to grow or are kind of subcategories within tech that probably are going to see more growth next year?
I'll talk about the growth ones. I'm not going to say anything about the ones that I think won't make it because, like, who am I, right? Like, what do I know? Like, I'm
It's not
not smart enough.
predictions.
But I can talk about what I think will do well.
Let's do that.
Um,
Yeah.
Yeah, let's do that. Let's keep it positive. I also don't want to get canceled.
Love it.
So I think the growth is going to come from areas like cybersecurity, which
Mm,
is just a growing concern, right? Cybersecurity is a really interesting place for a software salesperson to take their career. And so I think that space is one that people should greatly consider. It's very intellectually stimulating to work there. You just have to open any newspaper over the course of a month, and you notice that this is a core concern for businesses. They're getting hacked, it's getting more complex, they need to invest. And there's a lot of innovation happening in cybersecurity as well. So you have companies that are experiencing rapid growth, and segments within it that are experiencing rapid growth, because we're moving away from the way cybersecurity took place a bunch of years ago to how it needs to happen right now. So there's a fundamental shift taking place, and that creates great opportunities for people. The other place that I think will experience growth is actually sales tech. And I think sales tech is going to experience growth for a number of reasons. Yes. Uh, it's a harder job. It's harder to do sales right now, right? So you're going to try and invest in technology that creates efficiency, drives productivity, and enables your teams to do better. If you go by the assumption that it is going to be hard to hire great people, no matter which market you're in, I would argue it is still quite difficult to hire truly elite sales professionals in software right now. And I would
mm,
say it's hard because there's only a few of them. And if they're gainfully employed, are they going to take a risk today? Probably not, right? So you're only left with the few that are maybe in bad companies and are looking to leave, and everyone's fighting over them. So it's hard to get them. And so if it's hard to hire great people, then you need to, as a company, say, okay, if we've got them, how do we hold on to them? That means we need to give them the best tools available, and we need to invest in equipping and enabling them to be as productive as possible. And so that to me is enough to say there's going to be demand for sales tech moving up. I think you also, it's fair to say that right now we don't know how most of the world is going to operate its business, right? It's going to be some form of hybrid, I would imagine, is going to be the norm, with many companies being remote first, and then some old traditional firms that are just going all in on like five
right.
days a week in the office, right? So if we're in this hybrid environment, I don't think anyone solved it. I don't think anyone does the virtual component really well, right? I don't
We
think
haven't
we
figured
do.
it out. I think generally as leaders, it gets going 100% remote. Like we haven't figured out how to master it. And I think I do believe and agree with you. Hybrid is going to be the future, or having remote with more in person, just more in person events or the ability to meet in person.
Yeah, and we're learning now, like, what are we giving up? So the first thing is, I think it's really interesting when you see companies that are known for making really smart data-driven decisions willing to fight the fight on going hybrid. So when Apple says we're willing to take heat from our employees and lose some of them because we feel so strongly about the need to be hybrid and have people in the office a couple of days a week, we have to take something from that. They've seen something. Like, they're not just willy-nilly saying it, right? They don't do things like that. These companies make really good decisions. So there's something that they see, that they, because of which they want to do this. On the flip side, I don't think we've understood everything we give up when we're completely virtual. And so over time, we're going to figure all those things out, and we're going to solve for it, and we're going to get really good at that, no doubt. And technology will equip us for it. And so I think things that help you operate your business remotely really well, those things you will see demand for. Those are a couple of things that come to mind. I'm sure there's a lot more, like operational technologies and cloud spending, etc., that'll do well as well.
Love it. You mentioned B2B tech will continue to drive efficiency, or platforms that continue to drive efficiency will continue to grow. So I just want to remind everyone, you can win a 3-month Proposify subscription by just simply asking a question. So if you haven't done so, feel free to do so for your chance to win. But going on to the next question. So we talked about B2B trends, that we are seeing a slowdown, hiring is slowing down. Pavilion, which is a sales marketing community, they surveyed about 145 high growth startups just recently, or executives for high growth startups in September, and only 36% said they're likely to hit their original 2022 revenue targets. So surprised or not surprised by 36%?
Surprised that it was so high, to be honest.
See with
Yeah.
me.
Okay. So we're on the same page then. Well,
Yeah.
if you think about it, when do we set targets? We set them at the end of the year, right? It's going to be really choppy. It's going to be strange to set targets for next year with all the unpredictability, but that's another discussion. Last year's targets were set when the market was super hot, right?
Right.
And everybody was feeling so excited. So these
And
were really
confident. We
so
feel good.
confident. Yeah,
Yeah.
and we saw all the proof to feel good, right? Like when your pipelines are strong and your demand is flowing in, you have more demand than you can satisfy, like your close ratios are high, you're going to feel confident. And with that confidence comes targets that are very like aggressive targets. And so I think for 36% of companies to be able to hit those aggressive targets in this environment is spectacular, like remarkable. I would have thought maybe it's 20% because looking back, like when I look at different downturns, I feel like in every down, and this is just me being anecdotal, to me, it feels like 20% of the sector does well in every downturn, right? Like you saw Zoom and all those companies do
The
so
80/20
well.
rule, right.
The 80/20, right? Like it's usually these 20% that are enabling something in that environment that do really well and everybody else is like figuring shit out. 36% to me was a high number.
So tech is kind of we're seeing it slow down. Are there any other categories that are booming? We talked a little bit about the cybersecurity, but anything else out of tech that you just know like that are doing well that you could shed some light on?
I would say outside of tech, if you were to look at the S&P 500 and you were to try to break it down company by company, you learn which spaces are stabilized and which spaces are okay in this environment, right? Like you notice that supply chain companies, like if I'm a salesperson and I'm working in supply chain, it's stressful, but I'm actually doing well, right? There was a lot of demand for my services. There wasn't enough supply of these services, and so as a salesperson, there was a really good environment available over there for the last, many quarters. My ability to hit target or exceed target would have been quite favorable to me, and they would have needed people in all other go-to-market roles as well. So I would say that sector is one that I think is still going to be fine because I think the supply chain issue is evolving
Right.
and isn't done completely. Obviously, energy companies had record years, right? Like I think Chevron or Shell posted their best ever year. So there are spots, parts of financial services are okay as well. But I would say this, and this is me just, this is now a personal opinion. If I'm a salesperson at the early part of my year, early part of my career, I should be considering technology as the main sector that I'm trying to get into. I would argue that we make a calculated every decision we make in business is a calculated risk. So there's not no risk associated with it, but the overall package is quite favorable. The chance for faster upward mobility than in other sectors is available. The chance to do something really intellectually stimulating is more available. The chance to build some serious wealth is available, and the counter to that, the con of all of these things is that sometimes when the market turns, we find ourselves in the moment that we're in today. But I would say net, it's probably the best place to take your career still.
Awesome. You had mentioned that 2023, we will most likely see growth, specifically in certain sectors. But any other predictions for next year?
This will be fun to come back to and see all the things I got wrong.
We will call you on it. These are just your high level predictions.
It'll be nice and humbling. I think so. The first thing is the the growth within tech is based on these surveys, right? And I think the takeaway over there is that irrespective of the state of the market, there are categories within technology that do something so important in today's world that money will get allocated over that. And we'll also see where money gets deallocated from, if that's a word, or
Yeah.
gets pulled away from, right? So I think we need to, as software salespeople, be aware of this. We're going to see some really interesting trends, and we need to use those to make decisions about our career. I think other trends will be that you'll see companies be more intelligent about growth. They just have to be, right? Like, this is not rocket science. Like, capital is going to be more expensive. If interest rates are higher, the cost of capital is higher, which means that the way that we can deploy capital in the market changes, right? When your interest rate's zero and you put a zero on the discount cash flow, The way you can give money to a company is very different to when interest rates are 4 or 5%. So money is going to be harder to get, which means you have to do more with the money that you've got, and investors are going to push for intelligent growth. And so you will see companies really, I think, doing some really smart things, which is like, how can we efficiently and effectively grow our businesses? How can we
Mm,
be secure in this environment in all different types of markets, or be more secure than we were in 2022? So I think that's good. Like there's a lot of people much smarter than I are talking about the fact that too much money too early on can be very damaging to a business, right? Especially in tech. And so I think we're going to see some good end results of this correction in terms of the ease of capital being available. And so for software salespeople, that actually will mean that companies are going to really think about how to drive productivity per person. So quota in SaaS is set as a multiple of total income, right? So early stage companies, series A and B, an enterprise AE will have a quota that's 4 or 5 times their total income. But by the time you get to SAP, it's like 15 times total income, right? And so we're really going to start thinking about this multiple and say, okay, how can we drive
mm,
this? What training can we do? What tools can we give them? Do we need to change who we're buying? What's our cadence? Like all these things will become bigger conversations, I think. I think enablement will play a much bigger role. Sales operations will play a much bigger role because this is their problem to solve, right?
right.
Get us to a higher multiple. So I think that's going to be something that plays out next year, or at least should. I don't know if it will, but it should. I also think that you're going to notice that employees are going to really not have the same leverage that they had in the previous year.
Hmm.
Um, and that's hard. Like that's hard to deal with, right? Employers are going to gain some of the leverage back, and it's going to be more balanced. But last year, employers had no leverage. Like I saw mid-market reps move from like a 90K base to 170K base, right? Like it was that. Like that's wild to me. That makes no
Right.
sense. It's just such a nonsensical move to make. But companies were making moves like that because they had no other choice. So I think the leverage is going to get balanced out a
Tables
little
are
bit more.
turning.
Tables are turning, not completely. Like I don't think it's going to be that employees have no leverage. They just have less leverage than they had.
So interesting. So if there are or if there is a sales professional who's currently listening or listening after, um, and they're in the market for the next opportunity, what advice do you have for them? We said that it's slowing down. It's hard, a bit harder, but still, sales professionals are always in demand. So, or good ones. What's your advice?
Let's talk to software salespeople, right? So and give them some advice.
Yes.
So that way we can be a little bit specific to them. Um, the first thing is there's enough demand for you to find a job, right? 28,000 software sales jobs posted in North America in the last 7 days. There are jobs out there, right? So the first thing is don't assume that the market is what sometimes it feels like when you're online. A lot of those things are true, but the counter narrative isn't one that you hear a lot of, which is the sector is still a lot stronger than we thought. And
Mm,
it's going to start picking. I think if we get three inflation readings that all drop, you'll see market sentiment change so significantly, and it's going to warm up quite significantly. And so we're moving towards that, right? We're not too far away from it. And so the first thing is there's jobs out there. The second thing is you have to understand that these jobs have two complexities with them. There are more candidates going after these companies than there were before. So they have more choice. Companies have more choice. The second thing is companies are making decisions. Any dollar any company spends, yours, mine, anyone else's, is based on risk management, right? Like I want to reduce my risk in this environment. And so when they're hiring somebody, that's a very big investment they're making. They're going to do more due diligence to see if this is a risk managed decision. And so how they interview you will be different. And so if you're preparing the same way as you prepared last year for interviews this year, you're going to struggle. I think you have to recognize the market you're in and recognize that companies are looking for salespeople that are able to drive demand and close deals in this market. And you need to be able to talk to that. The third thing is don't sit back and just apply for a job and hope something happens. The best jobs are just like great sales professionals. They're a small percent of the overall population, right? And the overall number of open jobs. And so let's say of the 28,000 posted in the last 7 days, maybe 5 or 10% of them are the best jobs out there. you need to treat getting those like a salesperson treats getting a big client or a really important deal done. You need to message the hiring manager. You need to have a cadence. It needs to be interesting. It needs to be well written. You need to pick up the phone. You need to just do more. And so I think if you are doing all of those things, you've increased the probability of not just locking in a job, but locking in a good job, even in this market.
Awesome. So the last question before we wrap up. So you're a salesperson and you're noticing your close rates are going down, your deals are stalling, ACV is going down. What's one takeaway you'd like that sales professional to walk away with?
I think we have to reflect on the last 3 years and see that this is a huge opportunity for us, right? Previous generations would, economies are cyclical in nature. Previous generations would see those cycles happen every 10-ish years, right? There was the 2000, then 2008, etc. It was a long periods of time. And so you really couldn't develop a lot of muscles around how to recognize this before it became a problem and how to navigate within it. We've had three extreme moments in 3 years: an economic shutdown because of the pandemic, a boom afterwards for reasons we've discussed, and now a correction again. So I think the takeaway is that it's a hard time to do business for everyone. It's not impossible, but it's hard. But we get to learn more during this period and more around how to manage our risk in the future than other generations have had the opportunity to do before. And so we should be thinking about that. We should be developing skills that drive demand and help us close deals at a favorable rate, maybe not the rate of last year, but a favorable rate in this market, knowing that those skills do us really well in a hot market as well.
Awesome. And you've heard it from Asad himself. So thanks so much for joining us, Asad. It's been awesome hearing about the market, what it all means, the sales hiring trends that you've been seeing and seeing them firsthand. So I've learned so much. And if you've been listening and have learned, post one learning to get a free Proposify t-shirt. You'll get it at the end of the day. Thanks again, Asad. Join us next week. We're live every single Wednesday. We'll have Kristen Twining, SVP of Sales, who's going to tell us how to grow your career from BDR to CRO.
There we
Join us
go.
next week. I know, it's amazing. Thank you so much, and we'll see you guys next time.
Thank you, Nadia.